Today, we're going to talk about the new tax law changes in the new One Big Beautiful Bill Act. This is a major update to the tax code. I'll explain what's changing, who benefits, and what you need to do in order to take advantage of it. We'll be focusing primarily on the individual aspects of the bill. We will not be focusing on tax changes that will affect corporations and pass-through entities like partnerships and S-corps. So President Trump signed this bill into law on July 4th of this year, 2025. It makes the 2017 Tax Cuts and Jobs Act permanent and adds new deductions and credits. This affects seniors, families, workers, and high net worth individuals. If you pay taxes at all, this is pretty much going to affect you in some way. The first change we have is the standard deduction is going up. For single filers, it will increase from $15,000 to $15,750 in tax year 25. For married couples filing jointly, it will go up from $30,000 to $31,500 respectively. This means more of your income will be shielded from federal taxes. If you're 65 or older, you'll get a bonus deduction on top of the standard deduction for seniors or itemized deduction. It's $6,000 per taxpayer who's at least 65 years old. Keep in mind that this deduction phases out for single earners making $75,000 or more per year, or $150,000 or more if filing jointly. Seniors will see a noticeable reduction in taxable income as a result. Another big change we see is the SALT deduction cap is increasing. So currently it's at $10,000. That's going to be going up to $40,000 for 2025. It will increase by 1% each year thereafter until the year 2029. In year 2030, it will drop back to the $10,000 limit that we currently have. If you live in a high tax state, this could save you significant money on your federal taxes. As you might know, filers who take the itemized deduction can include local income and property taxes against their federal taxable income. Previously, this was limited to the $10,000 cap, but is now much higher. The $40,000 cap will phase back down to $10,000 for those who earn above $500,000 per year. So currently, if you lived in a high tax state like New York or California, if you combine, let's say, your state income tax and your property tax on your personal residence, if, for example, that was $20,000, you could only take a maximum of a $10,000 itemized deduction. But from here on out until year 2030, you'll be able to take that full $20,000 itemized deduction, assuming that your total income is below the $500,000 threshold. Next, we have the child tax credit. This has been raised to $2,200 per child, up from the $2,000 it was previously at. This amount will also be indexed to inflation for the upcoming years. If you have children, this helps reduce your tax bill a little bit more. The refundable portion of the child tax credit remains the same at $1,700. So just to explain the difference, if you have a tax liability, let's say before applying the child tax credit, you had a $3,000 tax bill owed, you were allowed to take the full amount of the child tax credit, previously $2,000, but after the Big Beautiful Bill, it will now be $2,200. If before applying the credit, you did not owe any taxes, if you were a lower income family, then the maximum refundable credit that you'll receive is $1,700. Another noteworthy change in the Big Beautiful Bill is the end of the clean energy and EV credits. After September of 2025, no more tax credits will be given out for purchasing an electric vehicle. Previously, this was a up to $7,500 tax credit incentive for purchasing a new electric vehicle, or up to $4,000 if it was a qualifying used one. After December of this year, 2025, the clean energy credits for installing energy efficient appliances, windows, solar systems, etc. in your primary residence, that will no longer be given out. So all the energy efficient credits and the electric vehicle credits are being phased out at the end of this year. A change that probably won't be affecting most people is that starting in 2026, the estate and gift tax exemption increases to $15 million for individuals and $30 million for couples. This is a major benefit for wealthy families planning to transfer assets. So basically, if your estate is below those thresholds, you do not need to file an estate and gift tax return. Next, we have the new deductions covered by the Big Beautiful Bill. So a big one that's going to help out a lot of people is the no tax on tips. For tip income, you can deduct up to $25,000 in tips per year for those in occupations listed by the IRS as customarily and regularly receiving tips. Plan on having that released in a very short amount of time, probably next month. This deduction phases out after $150,000 in income for single filers and double that amount for married filing jointly filers. Additionally, we have overtime pay. You can deduct up to $12,500 per taxpayer in overtime earnings through tax year 2028. This deduction also phases out after your earnings surpass $150,000 per taxpayer. Auto loan interest, you can deduct up to $10,000 per year in interest on new car loans. There are several requirements for this deduction, the main one being that the vehicle has to have been assembled in the United States and is being used for personal use. This deduction is available through tax year 2028 and is available regardless of whether you take the standard or itemized deduction. Charitable giving. Even if you don't itemize, you can now deduct up to $1,000 if you're a single filer or $2,000 if married filing jointly for charitable cash contributions made to a qualified charity. Keep in mind the donations has to be cash. It cannot be household items. Savings accounts for kids. If your child is born between 2025 and 2028, you will get a $1,000 credit deposited into a savings account in the child's name. After that, the parents will be able to contribute an additional $5,000 per year starting July 2026. The money in the account will be required to be invested into a index or mutual fund linked to the US stock market like the S&P 500. After the child turns 18, the account will then act like an IRA account. More details on this are yet to come. Finally, we have the new PMI deduction. If you pay private mortgage insurance on your home, this amount is now treated the same as mortgage interest and is deductible for those who take the itemized deduction. So private mortgage insurance is typically paid by those who put less than 20% down on the purchase of a house. Whenever you put less than 20% down, you're required to purchase a private mortgage insurance. So this new bill will basically treat that the same as mortgage interest, allowing you to deduct it if you take the itemized deduction. Let's talk about who benefits the most. Seniors benefit from the increased deductions. Families benefit from the child tax credit in the new Trump savings accounts. Service workers and hourly employees benefit from tip and overtime deductions. And high net worth individuals will benefit from the estate and gift tax changes. Keep in mind that many of these provisions expire after 2028, with the SALT deduction dropping back to the $10,000 cap in 2030. So here's what you should do now. Review your tax strategy for 2025. If you're a senior, make sure you're claiming the bonus deduction for this year and thereafter. If you work in service or an hourly job, track your tip and overtime income. Even if your employer is supposed to report this on your W-2, make sure what you have matches what they report. If you're expecting a child, open up a Trump savings account to claim the $1,000 credit. And finally, talk to a tax professional to make sure that you're maximizing your tax savings and are receiving all credits that you are entitled to. Our tax practice is currently accepting new clients. If you'd like to reach out to us, the link to contact us is down below in the description. Otherwise, feel free to leave any comments or thoughts. I'll try to get back to as many as I can. So that's the update on the One Big Beautiful Bill Act. If you found this helpful, please like this video. I'll keep you updated on future changes, and thank you for watching.